Hello again and welcome back to another session of Commerce class with me, Suman Rathore. Students, financial statements are prepared at the end of the accounting period to know the financial performance and financial position of a company as on that date. And financial performance of a company is assessed by preparing trading and P&L account, and balance sheet is prepared to know the financial position of the company. And in our syllabus, we are provided with total 15 adjustments. So today, I'm going to take first 6 adjustments and will understand them practically also. So let's start our today's session. Now there are some important points which must be remembered while preparing final accounts. Like first is, expenses incurred for the year, whether paid or not, are included. And second, incomes earned during the year, whether received or not, are also included, because such expenses or incomes basically relates to this year. So it doesn't make any difference whether we have received them or we have paid them, because for calculating the gross profit or the net profit or gross loss or net loss, whatever the case may be, we have to take into account all the expenses and incomes which are incurred and earned during this particular year. Okay? Next is, expenses incurred relating to the subsequent years are excluded, and income earned relating to the subsequent years are also excluded, because such expenses and incomes doesn't belong to this year. So such incomes and expenses will be deducted or excluded while calculating profit and loss. Next is, items which are given inside the trial balance are written only once, either in trading account or in profit or loss account or in balance sheet. And the last is, items that are given outside the trial balance, which means which are given as adjustments, are to be written twice, because double entry in respect of all these adjustments is to be completed in the final accounts itself. Now our very first adjustment is closing stock. Closing stock is the amount of goods unsold at the end of the accounting year. It is always valued at cost price or realizable value, whichever is less. Now, as I said earlier that all the adjustments will be recorded twice. So the first entry of closing stock will be made in trading account as buy closing stock on the credit side, and then secondly it will be shown on the asset side of balance sheet. And if the closing stock is given in the trial balance only, like inside the trial balance, in that case it will be shown in the balance sheet only. Next is outstanding expenses. Now outstanding expenses are the expenses which should have been paid during the current year but left unpaid by the business for one reason or the other. Now the accounting treatment of such expenses will be, first they will be added to their particular expense on the debit side of trading and P&L account, and secondly they will be shown on the liabilities side in the balance sheet. Now in most of the cases, closing stock is given in the form of statement in adjustments, like stock on 31st March 2018 was valued at rupees 24,000 and market value is rupees 30,000. Now according to the principle of conservatives, closing stock is always recorded at cost value or market value, whichever is less, because it says that provide for all anticipated losses but anticipated incomes should be ignored. Like in this case, we will record closing stock at rupees 24,000. So we'll make the entry on the credit side of the trading account, like buy closing stock at rupees 24,000. Now all the adjustments will be recorded at two places. So first entry is made here in the trading account, and second on the asset side of the balance sheet, closing stock at rupees 24,000. Okay. Now let's see the next adjustment. Now suppose salaries is given in the trial balance at rupees 27,500, and in adjustment it is given that salaries outstanding for March 2018 amounted to rupees 2,500. Now, as salaries is an indirect expense, so it will be recorded on the debit side of the profit and loss account. So we will write it like 2 salaries with the amount which is given in the trial balance. So it is given at 27,500 in the trial balance. Then in the adjustments it is given that outstanding salaries is 2,500. So we will add that outstanding salary as outstanding salary 2,500, because outstanding salary is actually an expense that relates to this year. For calculating the net profit or net loss, we have to take that also in account. Okay, so here after adding 2,500 to 27,500, the total amount of salary comes to 30,000. Okay, now the second treatment of this adjustment of outstanding salary will go to the balance sheet. So in the balance sheet, it will be recorded on the liability side as outstanding salaries with the amount of outstanding salary, that is 2,500. Okay. Next is prepaid expenses. Now, prepaid expenses are the expenses that actually relate to the next year but have been paid in advance, and the benefit of such expense will be received during the next year. So, as they relate to the next year, so they will be deducted from their respective account on the debit side of trading and P&L account, and then secondly, they will be shown as assets in the balance sheet. Next is accrued income. Now, accrued incomes are the incomes earned during the current year but have not been actually received by the business, like commission received, rent received, or interest on security, etc. So, as they belong to this particular year, so they will be shown on the credit side of P&L account, or they will be added to their respective income on the credit side of P&L account. And as a second treatment, they will be shown as assets in the balance sheet. Now suppose the amount of insurance is given on the debit side of the trial balance rupees 1,500. Now as it is given on the debit side of the trial balance, so it is an expense, right? And then in adjustments, it is given that prepaid insurance amounted to rupees 300. So in that case, that expense of insurance will appear here on the debit side of trading and P&L account, like to insurance with the amount 1,500 which is given in the trial balance, and then from this 1,500 we will deduct the prepaid expense or prepaid insurance, which is 300, right? So the net amount of our insurance expense is 1,200, right? On the asset side of the balance sheet, it will be recorded as prepaid insurance with the amount 300, as we are fulfilling a liability in advance, so it will be regarded as asset for the business. Now suppose the amount of commission is given on the credit side of the trial balance is rupees 15,000, and then in adjustments it is given that commission earned but not received rupees 3,000. Now this commission which is given on the credit side of the trial balance is actually an income for the business, so it will be recorded on the credit side of profit and loss account, right? So we'll record it like by commission rupees 15,000, and then the amount of accrued commission that actually relates to this year but have not been received by the business will be added to this commission. So the net commission received is 18,000, right? And then on the asset side of the balance sheet, it will be recorded as accrued commission rupees 3,000, because this income actually relates to this year. Next is unearned income. Now sometimes we receive the whole amount together, but a part of it doesn't belong to this year. So as they doesn't belong to this current year, so they will be deducted from that particular income on the credit side of P&L account, and then secondly, they will be shown as liabilities in the balance sheet. Next is depreciation. Now depreciation is the loss or fall in the value of fixed asset due to their constant use in the business. Now the accounting treatment of depreciation is that it will be shown as an expense or loss on the debit side of P&L account, and then secondly it will be deducted from the value of that concerned asset on the asset side of balance sheet. Now suppose it is given in the question that rent received rupees 39,000 on the credit side of the trial balance, and then in adjustments it is given that rent received but not earned rupees 3,000. Now as it is given on the credit side of the trial balance, so it is an income for the business, so it will be recorded as buy rent on the credit side of profit and loss account rupees 39,000. Then the adjustment part. Here the rent received but not earned amount, that is rupees 3,000, is our advance income, which actually does not relate to this year. So we will deduct that advance rent of rupees 3,000 from the amount of our rent. So the net rent will be 36,000. Advance rent will be recorded here on the liability side of the balance sheet, as this income actually does not belong to this year. So this amount of rupees 3,000 will be recorded here on the liability side of the balance sheet. Now suppose plant and machinery is given in the trial balance at rupees 90,000, and then in adjustments it is given that provide depreciation on plant and machinery at 5%. Now as depreciation is a miscellaneous indirect expense, so it will be recorded on the debit side of profit and loss account. So we'll record it like to depreciation on plant and machinery. So 5% of 90,000 comes to 4,500. So we will record it here, and then on the asset side of the balance sheet, this amount of 4,500 will be deducted from the value of plant and machinery. Okay, so the value of plant and machinery given in the trial balance is 90,000. Then we will deduct the depreciation, which is 4,500. Right? So the net amount of plant and machinery comes to 85,500. Right? That's all for today. Thanks for staying in tune, and don't forget to like and subscribe my channel. Thank you and goodbye for now.